The global labor shortage is no longer a temporary post-pandemic headache. It has become a structural crisis that is choking warehouses, distribution centers, and security operations across the United States and beyond. Companies are struggling to hire and retain workers for repetitive, physically demanding, or high-turnover roles. The result is rising costs, slower fulfillment, and growing pressure on margins. Into this vacuum step 3 robotics companies that are turning autonomous machines into practical, revenue-generating solutions. SERV Robotics is deploying sidewalk delivery robots at scale. Knightscope is building an autonomous security force. Symbotic is reinventing the warehouse itself with AI-powered robotic systems. These are the automated warehouse and logistics kingpins solving the labor problem in real time. Today, I break down the latest 2026 numbers, deployments, and catalysts for each. The opportunity is massive and still early. E-commerce growth, aging demographics, and rising wage pressures are forcing businesses to automate or lose ground. Warehouses that once relied on armies of pickers and packers are installing robotic systems that operate around the clock. Last-mile delivery is shifting from human drivers to fleets of sidewalk robots. Security is moving from manned patrols to mobile autonomous units that never call in sick. The companies that can deliver reliable, cost-effective robotics at commercial scale stand to capture a multi-decade shift. The 3 names below sit at different points on that spectrum, yet all are already generating meaningful revenue growth and signing real commercial contracts. SERV Robotics, the last-mile delivery fleet. SERV Robotics is building and operating autonomous sidewalk robots that handle food and package delivery in urban environments. The company is still in the early commercialization phase, but the growth trajectory in 2026 has been striking. In the first quarter of 2026, SERV reported revenue of approximately $3.0 million. That figure represented a 238% sequential increase and a 578% jump year over year. Growth came across its offerings as the company scaled fleet deployments and expanded partnerships. Management reaffirmed full-year 2026 revenue guidance of roughly $26 million while guiding non-GAAP operating expenses in the $160–170 million range. The company remains deeply unprofitable on a GAAP basis as it invests heavily in fleet expansion, software, and market penetration. Second quarter results are scheduled for August 6, 2026. What makes SERV interesting is its focus on the last-mile problem that traditional logistics companies find expensive and inefficient. Sidewalk robots can navigate crowded urban environments, operate at lower cost per delivery, and scale without the same labor constraints. The company has been expanding its operational footprint and refining its technology stack. Revenue is still small in absolute terms, which means the stock carries high volatility and execution risk. Yet the sequential acceleration and the reaffirmed annual target show that commercial traction is building. In a world short of delivery drivers, SERV's robots offer a direct answer. Investors who can tolerate the early-stage losses are betting that the unit economics will improve as the fleet grows and utilization rises. Knightscope, the autonomous security force. Knightscope is taking a different path into the labor shortage by replacing or augmenting human security guards with autonomous robots. The company designs, manufactures, and deploys outdoor and indoor security robots that patrol properties, detect anomalies, and provide real-time monitoring. First quarter 2026 results showed revenue of $6.0 million, a 106% year-over-year increase. Roughly 70% of that revenue was recurring, a healthy mix for a hardware plus services business. Even more striking were the preliminary second quarter figures released in July. Knightscope reported approximately $9 million in revenue for the quarter ended June 30, 2026, more than triple the $2.7 million recorded in the same period a year earlier, and a new quarterly record. The company now serves 434 clients across 42 states. New and recurring contracts continue to come in, including multi-million-dollar awards announced earlier in the year. Knightscope remains unprofitable as it scales manufacturing, software, and go-to-market efforts. The stock is highly speculative and has experienced significant volatility. However, the revenue acceleration is hard to ignore. Security labor is expensive, hard to recruit, and subject to high turnover. Autonomous robots that can patrol 24/7, collect data, and integrate with existing security systems address a clear pain point for corporate campuses, parking facilities, and industrial sites. The jump from $6 million in Q1 to a preliminary $9 million in Q2 suggests the commercial model is gaining momentum. For investors looking at robotic solutions to the labor shortage outside pure warehousing, Knightscope offers a pure-play security angle with rapidly expanding deployments. Symbotic, the warehouse automation powerhouse. Symbotic is the most mature and largest of the three. The company builds AI-enabled robotic systems that completely reimagine how goods move inside warehouses and distribution centers. Its technology combines high-density storage, autonomous mobile robots, and sophisticated software to deliver speed, accuracy, and labor efficiency for major retailers and distributors. In the second quarter of fiscal 2026, Symbotic reported revenue of $676 million, up 23% year-over-year. The company swung to a GAAP net income of $9 million compared with a $10 million net loss in the year-ago period. Adjusted EBITDA more than doubled to $78 million. Cash and cash equivalents stood at $2.0 billion at quarter end. Systems revenue continued to drive the top line, while software revenue showed strong growth. Symbotic systems are already deployed at scale with large customers, including major retail and wholesale names. The company's ability to deliver measurable improvements in throughput and labor productivity has translated into a substantial backlog and recurring software and services revenue. Unlike the earlier stage names, Symbotic is generating positive net income and robust free cash flow in recent periods. The valuation reflects high expectations, and the stock can move sharply on any sign of project delays or margin pressure. Yet the combination of 20+% revenue growth, expanding profitability, and a multi-billion-dollar cash position makes it the clearest large-scale beneficiary of warehouse automation among these three. When companies decide they can no longer staff traditional warehouses at acceptable cost, Symbotic's platform is one of the leading solutions they evaluate. The global labor shortage is not going away. Demographic trends, wage inflation, and the physical demands of warehouse, delivery, and security work ensure that automation will keep accelerating. SERV Robotics is attacking the last-mile delivery problem with sidewalk robots and showing explosive early revenue growth. Knightscope is building an autonomous security force and just posted a record preliminary quarter with revenue more than tripling. Symbotic is already a scaled warehouse automation leader, delivering hundreds of millions in quarterly revenue, positive net income, and a fortress balance sheet. These three stocks sit at different stages of maturity and carry different risk profiles. SERV and Knightscope are still early and loss-making, offering higher upside potential if they execute. Symbotic is further along the commercialization curve and already profitable on a GAAP basis in recent quarters. Together, they illustrate how robotics is moving from science project to commercial necessity. The latest 2026 numbers show real customer adoption, rising revenue, and, in Symbotic's case, improving profitability.